Hello guys, this is Einstein once again. Okay, thank you guys for your support. If you look at our channel, we're seeing our channel is growing, the views are increasing, the subscribers are increasing, the comments are increasing. So guys, thank you very much for the support, and I encourage you to continuously like and subscribe, share the channel to your friends so that they also learn, right? So the concepts that I'll be teaching here, they are in a certain order, and I'm building on a strategy that I actually use, the concept that I use in my trading, right? So everything that I'm going to be sharing here is going to be of benefit to you traders, right? So we talked about the market structure, we talked about wave analysis, we talked about the PMS break-off structure. We went on to talk about the reversal patterns that we have in the market, how the market reverses, right? So a trader will also have to know how to enter, where to enter, right? So that's where we are moving on to today, and we'll be talking about what we call supply and demand, right? So our supply and demand is made up of what we call order blocks, right? Traders usually call them OBs, right? So basically order blocks are candles where market makers or the big banks have placed their positions. Generally, the market tends to those candlesticks and they are never violated. I'll explain more with the examples as we'll be moving downwards, right? So we expect price to respect these order blocks, and it's not every time that price is going to be respecting these order blocks. The time they're going to just violate those zones, right? But mostly we expect our price to respect those order blocks. So we have significant and we have insignificant order blocks in the market, right? I'll explain that. All right, so we have two types of order blocks in the market, right? We have what we call bullish order blocks, right? So every bullish order block that you're going to see in the market is going to create what we call demand zones, right? It's going to be creating demand zones. So the bullish order block is the last bearish candle before bullish movement that breaks the market structure, right? That is our higher high. It represents a high possibility of holding price when price returns to it. So what I mean by that statement is, using the concept that we explained in the previous videos, right? You look at the chart price on this very chart, it was moving up, right? It created this high, came down, right? Before price tends to go upwards, it left this red candlestick, the last red candlestick before price turns. That's what we call an order block. So this red candlestick that I actually highlighted with this gold color is our order block, and it becomes the bullish order blocks. That's the last candlestick before price changes. This is what in direction, and it's the very order block that causes price to break the previous high. That's a BMS. So it's the last bearish candlestick that breaks the previous high, or that causes a BMS. That's a bullish order block, right? So what we mean with this bullish order block is when price is now retracing on this corrective move. We covered corrective and impulse move. So when price is now correcting to this very order block, we expect our price to respect this order block. Price should not go below this order block. It just has to reject and push upwards from this from this order block. So basically that's a that's a bullish order block. Let's look at another example. So if you look at this chart, you actually see that our price was rising, right, in this region, right? It created this high, price came down. This last red candlestick becomes our our order block. The bullish order block is the last red candle, last bearish candle before price moves up to break the previous high, right? So that's our bullish order block. So what we expect after seeing this candle and after seeing our BMS, we expect our price to just come to this low, right, to this last candlestick. So this order block creates our our demand zone. So price has to come into the demand zone, and it doesn't have to go below this order block. It has to respect that and continues to move upwards, right? So in this case, price moved up, right? We expect traders to take their buy trades from this order block and risk this order block on. So our price managed to move up to break the previous high. And we broke the previous high. So after breaking the previous high, what we simply do, we look down to the to the left and locate an order block that we can use, right? So in this case, I highlighted this order block, right, and that's the one that we're now using, right? So price came back into this order block, right, respected that order block, and price started moving upwards. So we expect to be taking our buy trades from this order block, right? So now this becomes our demand zone, this becomes our demand zone, right? So traders may actually ask, why didn't you use this red candlestick, or why didn't you use this extreme candlestick? Those concepts, we explain them in the following videos where we talk about mitigation. In this case, this previous order block, it was mitigated. This one was mitigated, right? So the one to use is this one. So this concept, we explain them in the other videos, how to select the order block to use, right? Okay, so let's continue. So that's about bullish order blocks, right? Then we have what we call bearish order blocks. This is just the opposite of what? Of bullish order blocks. If you've understood the bullish order block, then bearish order blocks is easy, right? So the bearish order block is the last bullish candle before the bearish move that breaks the market structure, or that breaks the lower low, right? So it represents a high possibility. Remember, we're saying it's a high possibility, it's a probability of holding the price when the price returns to it. So we are saying, if price was going down, we've identified our trend, we have seen that our trend is a downtrend, right? So after seeing that, we locate our BMS. We have to see the BMS, right? So this is a BMS. Price managed to break this previous low, right? But where is that move originating from? This move is originating from this very high, right? This supply zone, right? So our bullish order blocks, they're actually called supply zones. So this BMS is originating from this supply zone. So the last bullish candle before price tend to become a down move there, that's our what? That's our bearish order block. So price broke structure, the BMS, and now price is returning. So this movement, we call it a return to order block, right? That's our corrective move. So our corrective moves, we'll be calling them returning to order block, return to order block. So price is now returning to this very order block that caused this BMS, right? So our bearish order blocks, they are called supply zones. They mark, or they create what we call supply zones. So this becomes our supply zones. What we expect our price to retrace back into this zone, and we expect price to respect that order block, right? Price doesn't have to violate this order block, right? So basically, an order block is the last candlestick before price changes its what? Its direction. And we have two types, the bullish and the bearish order block, right? So I'll just do a demonstration in the live chart of some examples that we actually have in the charts. But basically, this is what we have. So let's go straight to our trading view and analyze a few order blocks that we have. Okay, so let's look at this very chart, right? This is actually my analysis that I actually have there, right? Okay, I'll use the live example that we actually have here, right? So I am seeing that I have my impulse moves to the downtrend. I actually have a downtrend, right? And the previous thing that actually happened, I saw this previous low. My price have just broken that previous low. So after breaking this previous low, what is it that I expect after this move? So if price starts to give me a corrective move, I expect my price to come back to the very zone that caused this BMS. I try to identify the order block that caused this BMS, which happens to be this order block. So what I do, I just come here and I cover that with this rectangle. I mark that zone all the way to the right, and I'll have to wait. I'll have to be patient for my price to retrace back into that order block that caused this BMS. So in this case, this zone is a supply zone, and it's a bearish order block. The bearish order block is creating the supply zone. So I expect my price to come in this zone, then I'll look for my sell trades, right? That's how we do this. So this is actually setup that we have on GBP/USD on the daily time frame, right? Okay, so if you look to the left and investigate what price was doing, if you look at this very high price move down, it managed to break the previous lows. Breaking the previous lows, we identified the last candlestick before price turned down. It happens to be this one, right? Someone might actually ask, why not this one at the extreme high? We'll talk about selecting order blocks, whether we're going to select the order blocks that are at the extremes or that are somewhere in between the impulse moves. We'll talk about that in the coming videos, right? So in this case, this order block is the one that price is using to drop. So we expect to take ourselves from this zone. Then let's follow the move. So price started to go down and it broke this previous low right at this point. We see that break. So after seeing that break, we just look to the left, right, and try to identify the high that caused that BMS. So the high that caused the BMS is this one, and that creates our supply zone, right? So we expect price to correct, coming back just into this order block, and we expect to take our sell trades from there. So the same with this move, price moved down. So after seeing this BMS, we expect our price to correct. Remember, this is a corrected move. It corrects back into an what? Into an order block or the supply zone.